Hello friends, this is Raj Sastry from Raj Option Trading. Today is October 24, 2021. We will talk about selling put options. Selling put options is an income strategy, and seller of the put option will make money if the underlying stock increases in price, stays the same, or decreases slightly, as long as it stays above the strike price. This is why there are a lot of people who are making a living by selling put options. Probability of making money selling put options is usually higher. That's why a lot of people are attracted to selling put options, especially below the current stock price. So we got to look at few criterias before you sell put options, just to make sure you don't get burnt. So typically, make sure there is a bullish outlook for the stock. Understand the risk is unlimited here, maximum equating to strike price minus the premium received. So if you sell the stock at strike price 30 and receive $1, $39 is your risk here. So it's not unlimited, it's limited to around the strike price minus your premium. And maximum reward is limited to premium you received. That's why if the stock goes up astronomically, you don't make a lot of money. Your max reward is limited here to the premium that you received. That's why many people are going towards call options where the reward is unlimited. And this can be combined with other strategies like buy one more put options, even little down, so that way your risk is limited. You could do such things to avoid and limit the risk and make it defined risk type strategy. And sell when IV percentile or implied volatility is high. That's when you receive maximum premium. Also look at a clear support area, so that way stock will not go below the support area. At least you got some good confidence level about the support area. Also, don't sell too bigger time frame. Normally sell at most 45 to 50 days, unless you're a big believer in some of your favorite stocks like say Apple or Microsoft. Sometimes I've seen people selling even 6 months out. That requires a rock solid belief in the stock and your ability to buy the stock if it goes down. I've seen people selling Tesla put options, for 3 months, 4 months out, and they also made a good money because they believe in Musk. But typically, those are a little bit riskier proposition. Normally, it's good to sell 45 to 50 days out. And passage of time, or theta decay as we call it, it's your friend here if the stock price is above strike price. But if the stock price goes below strike price, theta decay is your enemy, and you will most likely get assigned, or you can sell the put option for a loss. And you can look at typically delta around 15 or so, or probability of touch to your strike around 30 or so. That's typically a good idea to sell put options. And also avoid stock with the heavy debt load, so that way you don't get burnt. And normally, don't sell just before the earnings, even though IV percentile is high. Wait till the earnings play out. Just after the earnings, normally, the IV percentile stays a little higher. You could sell at the time. So with that, let's look at when to sell and when not to sell put options. Best time to sell put options is after a negative news, earnings miss, or FDA rejection. As an example, we had PagSeguro, Pags, Brazilian fintech play. Stock came tumbling down. IV percentile is still high. You could sell put options in those type of scenarios. And we'll look at few more today. And growth stocks with a temporary weakness, those are the good ones to sell put options when IV percentile is high. And you could look at selling put options on your favorite ETFs, things like QQQ, SPY, IYR, and so on and so forth. When stock market drops big time, you could sell some put options on these ETFs. Generally, you'll get a good premium at the time. And don't be afraid of assignments. For me, when I had some assignments, those are my biggest gains most of the times, because they tend to go higher afterwards. and lighten up when the market is up, so that way you can buy during the crashes. This is one important step to consider when you're selling put options. Don't buy put options when the market is high at 52-week high. Instead, you can sell some of the options, put options, that is, so you can buy it back when the market is high. That's when you lighten up. But when the market goes south, that's when you buy some of these. That's when you sell some of these put options. So think about lightening up when the market is up. This is when you buy back, and selling put options when the market is crashing. That's when you get more premium, and you have to be selective here and buy some good quality names. And bad time to sell put option is after accounting scandal, management is cooking books here. Don't go there, it's not worth it. And stocks with a deteriorating performance. Some stocks don't catch a break here. They always keep going down. Don't go down the food chain here. Look at great growth stocks with the some temporary setback. Avoid options with a low interest, open interest, and high bid ask spread. Sometimes you see IV percentile is high, but the open interest is low, volume is low, and the bid ask spread is high. Avoid such scenarios. And don't take on too much margin. That's very important. If you take too much margin and sell put options, that will hurt you when the market crashes. It'll all you'll start getting the margin calls. It's not worth it. So with that, if you're a balanced portfolio, it's always good to sell some put options here and there, so that way you can outperform the broader averages. So with that, here are a few stocks you can sell put options right now. You got TAP here, Molson Coors, you got PagSeguro, and we got here INCY, and we got few more we'll look through. And as you look through, you might wonder, when do I sell put option? What is this put option? So typically, think about your favorite stock trading around, say, $40. And right now stock came down because there's a bad news, maybe earnings miss, maybe there is a FDA approval related issue. In that scenario, stock normally comes down. Suppose think stock came down to 40 after some bad news. Generally, when that happens, IV percentile goes higher because there's some volatility. Stock prices moved from 50 to 40. That's a volatility scenario. That's why IV percentile goes higher. You can go further down here, maybe to $30 or so, and you can look at the probability of stock touching $30. Make sure it's around, say, 30 or something along those lines, 30, 35, 40. Then you sell a put options at that strike price here and collect some money, in this case $2 for selling put options. You collect $200 because it controls 100 shares. So as long as the stock stays above $30, you can keep the $200 premium that you received. If the stock goes down below 28, because you collected $2, 30 minus 2, 28. If it goes below 28, you'll start incurring the losses, and you can either sell your put options, buy your put option that you sold for a loss, or you can get assigned at $30 even though stock goes below. So this is a quick nutshell of when to and how to sell put option. So with that, let's jump in here. Look at few stocks that fit this criteria here. Normally, I love to sell put option when IV percentile is high. As you can see here, Logitech, PAGS, TAP, Alkermes, all great stocks. I love all these stocks here. High IV percentile right now, and also low RSI. Low RSI tells you stock has been sold off here. It's a good time to sell put options here. Also, look here, I have not given you all the stocks with the not so great financials. I want to sell put option on growth stocks. These stocks are growing here. Companies have got nice sales growth, nice gross margin. I want to be safe when I sell put options. Think of this way. If I want to buy a stock at a better price, that's when I would sell put options here. Logitech as an example, great stock at $89. I might sell put options at a lower price, maybe say $80. If it comes to 80, I don't mind buying it because I know it's a great company, nice sales growth, nice gross margin. That's how you think about selling put options. Think as if you are going to buy the put option or buy the stock. If the stock price comes to your strike price. And we got a few more here. PAGS, TAP, ALKS, great stocks here. We got a few biotech or healthcare names like Cerner. I love Cerner. TPTX, again, a great company here. Incyte, all beaten down here. And we got AZEK here along with the Trex. This also came down. You could buy that one too. And few more here. So look, as usual, keep watching the RSI levels. Some of these have got low RSI, tells you there is more room to run here, and high away percentile, which means you can get nice premium for selling these put options here. So with that, what we'll do now is we'll go into Thinkorswim platform and bring up some of these stocks here and look at how do we sell put options and understand the strategy here. So with that, let's jump in here and bring up, let's start with the Logitech here, LOGI. As you look through Logitech here, stock has been dropping off late, as you can see here. Now it's trying to go higher. As you can see, there's little uptick here. As you see, your RSI is trying to gain some momentum here. IV percentile is high, 54. This is when you get good money here, good premium for selling put options and taking that risk. From a DMI perspective, blue line is down here, red line is up. That's a bearish. But watch what's going on. Red line wants to go down, blue line wants to go higher. This can turn into a bullish crossover anytime. That's why I like to sell put options in these type of scenarios where I know stock has fallen off the cliff after the earnings here, but it's trying to make a way, go higher here. And as you look through here on the balance volume is strengthening here, that's a good sign. And also check-in money flow is also strengthening, that's a good sign. So what I would do is I would go into this option chain here, bring up Logitech. You could, right now 54 days is good enough. You can go here and look at the option chain here. So since you're selling put option, strike price is around 89. Stock went up as high as 140 a while ago. And what we'll do is we'll do one more thing. Let's go back to the chart here and look at this here. As you look through here, when you're selling put option, you got to understand what's a good support level, so that way stock may not go below. In this case, as you look through here, look here, there is a stock came down here in 1 year about 74. That could be even, I think, even up here around 79 could be a good level here, which is around $10 below the current stock price. So we could look at 79 or 80 as a good support level here and sell put option, understanding that's good support level to begin with. So what I will do now is let's go to option chain here, bring up Logitech, and as you look through here, look at $80 that we looked at earlier. Right now, nice premium, $1.50. You could collect that money. And look here, we got a nice 175 open interest here. You could sell put option here. If you're a little more conservative, you could also sell at 80 here. Keep watching the IV percentile, probability of touch here. It's around 46%. What it tells you, there is a 46% chance the stock can come to $80. So if you're conservative, go after this one here. There's a 29% chance of stock price touching $75. That's why this could be better strategy. You could just sell this here and earn $80 if the stock comes below $74 and 20 cents here. That's your break-even point here. You're earning $80 and you're selling stock at the strike. You're selling put option at strike price $8.75 and you're getting $80 as the premium here. So it's a good strategy here. You could do something like this. If the stock price comes down to 75 by 17 December in 54 days, you could buy it outright. Otherwise, you get to collect, $80 and, go from there. So with that, it's a good strategy. I've been implementing this, for a while. This helps you to, take advantage of your portfolio that you have and bring in some money, leveraging brokers' money, so that way you can make some additional money with it. The key is not to overdo it, so that way you don't want to get any margin calls. So what we'll do is we'll probably look at one more, so go through the same strategy here and take it from there. So what I will do is I will go to one more stock here, which is TPTX, and look at that one. TPTX is one of my favorite stock. It's a rocket ship, goes up and down drastically, as you can see here. This one you got to be a little careful, because stock has been, as you see here, going up and down drastically. That's why there is a high IV percentile 50. And what I would do in such scenarios, I would go a little bit wider here from a time frame. I would probably go 3 years weekly and try to see what's the good support level. As you look through, looks like it's at a good support level right now. Stock is at around 45. That's a good support level. Even if you go back to 3 years, I would probably go around say 35 or so, and see if there's a money to be made here at that price here. This one right now is bearish, as you can see here. It's all the way bearish. There is no bullishness here. If you're conservative, stay away. But if you want to take some risk and sell some put options, you could do it, given there is a low RSI. So with that, let's go here to option chain here. 54 days is good enough. You could go with that. And TPTX right now it's at 42 here. As you look through here, 35, 40, 40. At 40 there is a high chance of stock reaching 40 here, 82%. So in this scenario, what I would do is I will not take this trade here, because for me it's not too much money here. I could sell put option at 40, but I know there is a high chance of stock touching 40, which is 82%. It's not my cup of tea here. So I would turn my attention to maybe one more here, which is TAP Molson Coors here. It's a great company. It's in the beverage area. So as you go through here, let's go to the chart here. Molson Coors is a good company. It's a 3-year chart here. So some good support level can be around, say, 38 or so. Right now stock is at 44. Let's see if we can get some good price for selling put option around 35 or so. So with that, let's jump in here and go to option chain, and stock price is 44. We looked at 30, 35 or so. There is not too much money here. 40 also, there is not too much money. So there is a high chance of stock reaching 40 here, 49%. This one also I would skip here. There's not too much money to be made. So we can go to one more here, which is AZEK. So if you look at AZEK here, as you scan through before you go to the other chart here, stock is at 36 here. So here 30, this is also not a great one. You can turn into PAGS here, PagSeguro here, and look at PagSeguro. PagSeguro, as you can look through here, stock is at 37. You could come around, say 30 is a good one here. Chance of stock reaching 30 is 39%. I would sell some put option right here, collect $70. If the stock comes below 29, I would buy the stock outright. I don't mind. This is a good one. I would take here. And let's look at maybe one or two more here, or maybe just one more here. Let's look at let's see our chart quickly. So as you can scan through here, X-ray is a good one. I love X-ray. RMD is also a good one. Let's look at X-ray here. X-ray is a dental company, as you know. Right now, as you look through here, X-ray very quickly, IV percentile is 49 or so. But typically, IV percentile changes as you go into a weekly, yearly chart. Let's go to the yearly chart quickly. So as you look through, it's a high 79 right now. So let's see if we can sell some put option here and go from there. So X-ray $58 as you go through here, 50, 52. Yeah, you don't make too much money here. We can skip here and go to one more here, RMD. Again, a good one. As you look through RMD here, 260 stock has been making a way higher. That's a good story. And if you look through here, nice IV percentile 77. Stock is trying to make a bullish crossover here. Nice on the balance volume, all good here. It's all checked. So if you go here, stock is at 267, and if you go here around 210 here. There is a 18% chance of stock hitting 210. You could sell some put option right here at 210, collect some good money here. If the stock comes to 210, you'll end up buying the stock at that price. If you have some money, or if you can take the risk, you could sell this put option here. Other one you could do is really you could sell some spread here. You could sell 210 and say 200 spread here. See if there is a good money here. So you could sell some spread here. Let's go here. There you go. So we are selling 210 and buying back 200. This is a good proposition here. You are taking a $10 risk, which is 10 times $100,000 risk here, and you're collecting $70. And you could sell this here. And if the stock comes, if the stock price is below 209, which is, there is a chance, but very low chance of this happening, as witnessed by, here, 18% chance of stock hitting 210. You could take the risk and sell this great spread, earn $70 here and take it from there. So with that, put options selling is always a good strategy. There is a high probability of success. For the high price stocks, always leverage this selling vertical spread here, so that way it's a little more defined risk strategy versus undefined risk. So with that, let's wrap here. Thank you very much. This is a quick cheat sheet. When you want to sell put option, your outlook is bullish, you want RSI to be lower, you want IV percentile to be higher, and you want day to expiration to be around 45 to 50 or up to 60, and you want delta to be low, and you want probability of touch to your strike price to be around, say, 30 or 35, something along those lines. With that, thank you very much. Happy investing and trading. Please subscribe.